She sells out a $29 lip kit in 60 seconds. 2 years later, Forbes calls her the youngest self-made billionaire in history. But hold on.
Kylie Jenner as a self-made billionaire.
Kylie Jenner, women billionaires with a B. Kylie
Jenner, she replaces Mark Zuckerberg as the new youngest ever self-made billionaire.
1 year after that, they take it all back. Turns out, Kylie Jenner didn't build a billion-dollar company. She built what many analysts now describe as a brand illusion. And the deeper you dig, the messier it gets. Questionable numbers, outsourced operations, and the money, according to multiple reports, it didn't quite add up. So how do you convince the world you're a billionaire when you're not? Let's unpack the empire built on insecurity, Instagram, and influence over perception. Kylie Jenner starts out as the youngest Kardashian Jenner, the quiet one, the background sibling. Then she flips the narrative with her lips. In 2015, she launches Kylie Cosmetics with a $29 lip kit, just a few thousand units. They sell out in under a minute. She crashes her own website. And then she crashes expectations. Within 3 years, the company is projected to hit $1 billion in sales. And in 2019, Forbes calls her a billionaire, the youngest one ever. Younger than Zuckerberg. But a year later, they take it back. Because none of the numbers added up, according to their follow-up investigation. What happened? Let's break it down. Kylie Jenner didn't just sell makeup, she sold a story, a transformation. One that started with a personal insecurity she shared publicly. In interviews, she's talked about feeling self-conscious about her lips growing up. One comment from a boy reportedly stuck with her, saying she'd be a bad kisser because her lips were thin. So she started overlining them. That eventually led to lip fillers. Then she turned that insecurity into the foundation of a brand. In 2015, she launched the first Kylie Lip Kit, $29 for a liquid lipstick and matching liner. She dropped 15,000 units. They sold out in under a minute. Her website crashed. Headlines called it a phenomenon. But the execution wasn't solo. According to multiple reports, she partnered with Seed Beauty, a private label company that handled manufacturing and packaging. Shopify ran her e-commerce back end. A logistics team fulfilled orders. Kylie was the face, the aesthetic, the engine of hype. That was the business model. No stores, no paid ads, no marketing team, just Kylie and her social media. She'd post a casual selfie or a lip sync video, and fans treated it like a product drop. Each launch felt personal, limited edition, exclusive. Between 2015 and 2018, Kylie Cosmetics reportedly brought in $630 million in revenue. Not bad for a company with just 7 full-time employees. Commentators even joked that her biggest expense might have been her phone bill. Her brand became aspirational, without luxury pricing, somewhere between drugstore and designer. The packaging was pink, the vibe was intimate, the results, viral. Kylie didn't invent the formulas, but she mastered the funnel: insecurity, transformation, product, validation. And for a while, it worked perfectly. In 2019, Forbes declared Kylie Jenner the youngest self-made billionaire ever. The reaction? Divisive. Critics online asked, "Self-made? Really?" They pointed to her famous family, her massive platform, and her status as a pop culture fixture long before launching her brand. Some argued she had advantages that made her path easier. Forbes itself acknowledged this by rating her 7 out of 10 on their own self-made scale. Still, the label stuck. Kylie told Forbes she owned 100% of Kylie Cosmetics and had built it with no money from parents. That helped cement the image. The youngest Jenner wasn't riding coattails. She was running the show. And with no retail locations, no traditional marketing, and only a handful of staff, the profit margins looked huge on paper. That's what Forbes based their billionaire status on: revenue, ownership stake, and earnings. But behind the scenes, some industry insiders questioned those numbers. Detractors noted that revenue figures were often self-reported, and without public financial disclosures, it was hard to verify. Even Forbes later admitted they had relied on information provided by Kylie's team. In 2020, they walked it back, publishing a new investigation titled "Inside Kylie Jenner's Web of Lies." They claimed documents given to them overstated revenue and profits. According to their reporting, Kylie may not have been a billionaire after all.
For years, the Jenners have been lying. She has lied and exaggerated just how successful she really is.
Kylie's representatives strongly denied the accusations, calling the article inaccurate and false. So, was it a misunderstanding? A media stunt? A misread? The truth depends on which numbers you believe and which sources you trust. In 2019, Coty, Inc., a publicly traded beauty conglomerate, bought 51% of Kylie Cosmetics for $600 million. That deal valued the company at $1.2 billion, but soon after the acquisition, red flags started to surface. Forbes later alleged that some of the financial data shared with Coty and the public may have been inflated. Their investigation stated that Kylie's team had submitted tax documents that were likely forged, a claim her representatives denied as categorically false. The Coty acquisition became a case study in buyer's remorse. Analysts began questioning what exactly Coty had purchased. There were no physical stores, no R&D team under Kylie's control. The brand was tightly tied to her personal image and to her online audience. When Coty took over, sales began to drop. According to Coty's own filings and statements to investors, revenue didn't match initial projections in the years following the deal. Shareholders filed lawsuits, claiming Coty misled them about the strength and value of the Kylie brand. The price of Coty stock fell sharply after the acquisition, though market trends and pandemic-related volatility may have contributed. Internally, Coty admitted they had overpaid. In a 2021 earnings call, the company's CEO acknowledged that they had learned lessons from the Kylie deal and would approach celebrity partnerships differently in the future. The Coty episode wasn't just a numbers story, it was a branding story. Buying Kylie's company meant buying her persona, her fan base, her hype. But when that hype didn't deliver consistent results, the billion-dollar valuation didn't hold. At its core, Kylie's power wasn't just in product, it was perception. She blurred the line between influencer and empire. DeMarie Analytics once estimated that her Instagram posts were worth over $1 million each in media value. That number wasn't verified by financial statements, but it illustrates a key point. Kylie's audience was the engine, but perception isn't profit. When the Coty deal closed, many assumed Kylie Cosmetics would scale into a legacy brand, but reports from outlets like WWD and Bloomberg suggest sales momentum didn't meet expectations post-acquisition. Some analysts argued Coty may have invested more in hype than in long-term infrastructure. Meanwhile, Kylie remained massively influential. She gained millions of followers. Her posts still dominated headlines. But the business didn't seem to keep pace with the brand's online clout. And Coty, they began shifting focus. By 2023, they had transferred more control of Kylie Cosmetics back to her and were reportedly reconsidering their strategy. So what was actually bought? Some say it was a cosmetics brand. Others argue it was access to attention, eyeballs on Instagram, loyalty from Gen Z, and the illusion of limitless growth. In the end, it wasn't just about lipstick. It was about how much people believed in the brand, and what happens when that belief fades. So, Was Kylie Jenner ever really a billionaire? Technically, for a moment, possibly. But when you strip away the filters, the headlines, and the hype, the numbers start to look a lot less solid. Forbes originally called it, then they walked it back. SEC filings, media investigations, and investor lawsuits all tell a different story than the one fans saw on Instagram. Because Kylie didn't build a billion-dollar business in a traditional sense. She built something else, an empire of attention, a brand built on relatability, exclusivity, and the illusion of control. She turned a personal insecurity into a product into a moment, and a moment into a media storm. And for a while, it worked. But when attention fades, the numbers have to hold. When that doesn't happen, the narrative crumbles, no matter how many headlines or selfies say otherwise. Kylie Jenner and her representatives have denied any intentional misrepresentation. This video is not alleging guilt, only reviewing publicly available facts, filings, and credible media coverage to analyze how the empire was built and where it showed cracks. So the next time someone flashes 1 billion on social media, ask yourself, is it wealth or is it marketing? Drop your thoughts in the comments. Like and subscribe for more breakdowns that cut through the glam and get to the truth.